If you just formed an LLC and you're paying yourself by transferring over random amounts into your personal account, not only are you doing it wrong, you could be setting yourself up for tax penalties, audits, and major headaches later. But don't worry, I'm going to show you exactly how to fix it. If you just started an LLC and you're asking yourself, hey, how exactly do I pay myself? Don't worry, you're not alone. This stuff can be very confusing when you first start out. I'm Jeff Hampton, asset protection lawyer, founder of STR Law Guys, and author of Investor's Blueprint, Asset Protection Made Simple. I remember when I first started my law firm back in 2005. Prior to then, I'd always had a job and I'd clock in, clock out, and money just showed up in my bank account. But now I owned the business. I had clients, I had income, I had expenses, and I had no idea how much I could pay myself. I didn't want to mess it up, and I'm sure you don't either. So today I'm going to break down a very simple 3-level system for how you can pay yourself, not only to accommodate where you're at now in your business, but when you scale it and really start making money. Level number 1. You just formed your LLC. You just got this business started. Maybe you're doing a side hustle. Maybe you've really just started implementing your business ideas and just a little bit of money might be coming in. Maybe you're thinking, can I finally pay myself? I mean, after all, I have a few dollars in my bank account. Not so fast. Watch out here. Many people are tempted to take the first dollar bills that make it into their business bank account and start using it and grabbing it for whatever they want. But here you probably should wait a little while. At this stage of your business, you really should think of it as instead of pulling money out, you really need to be putting money in. Think of it like planting a garden. You don't eat the tomatoes in week 1. You buy seeds, you build a fence, you dig deep and bury the seeds into the soil, you invest. Now here's the critical part that most people get wrong. They mix their personal and their business bank accounts. Do not do that. Whatever you do, do not mix your personal money with your business money. Instead, number 1, open a business bank account. Real easy. Get an EIN number from the IRS. Turn right back around, go to your local bank, open up a business bank account in the name of your LLC. Number 2, transfer money into this new LLC for your business as either a contribution or as a personal loan. Number 3, and very important, only pay business expenses from this business account. I know it's tempting to shortcut this part, but trust me, it sets the tone for everything else for your business. Okay, level 2, now this is where your business starts really making money. Let's say the profits really start rolling in. Maybe you're making $2,000 a month, maybe $4,000 a month. Maybe you're making $60,000 or $70,000 a year in net profit. And this is the time when you start wondering, should I convert into an S-Corp? Should I hire a bookkeeper? Should I put myself on payroll? Now hold up here. You don't need an S-Corp just yet. In fact, the cost of forming and maintaining an S-Corp usually outweighs the tax benefits you would receive. But here's what I do recommend. I'm a big fan of the Profit First system by Mike Michalowicz. This can be a game changer because I'm going to tell you, when you first start a business, once you start thinking the right way, it's also very tempting to never pay yourself at all. But the Profit First system, why did we start a business? We started a business to make sure we actually get paid. In fact, Profit First kind of reminds me of thinking about a pizza. Look, if you don't have slices of a pizza, it's easy to just grab bites from the middle of it, and until you slice it up, you know exactly how much everyone should receive of the pizza. And that's exactly what the Profit First system does. It organizes everything, and it gives you buckets for where your money should go. Here is the basic breakdown. 50% goes to owner's pay, 30% operating expenses, 15% taxes, and 5% profit. So if you're earning $10,000 a month, it would be $5,000 goes to you, $3,000 for running the business, $1,500 for taxes, and $500 into a profit account. Now, of course, these numbers can change based on your profit margins and exactly what your expenses are, but you need to know what these are, set them in stone, and follow this so that way you make sure you actually get paid. And there's nothing better than getting to the end of the month and knowing you're being actually compensated for all your hard work. But how do you actually pay yourself? You write yourself a check from the owner's pay account. Deposit this check into your personal bank account and then pay your personal bills from there. Don't pay personal expenses from your business account. And by all means, never deposit business funds into your personal account. keep everything separate. Pro tip here, some clients, if they get a little confused on this, you could actually set up your personal accounts at one bank and your business accounts at a different bank so that everything is completely separate and you don't accidentally make the mistake of commingling everything online. Okay, now we're at level 3, and this is where the real tax savings starts to kick in. Now let's say you're making quite a bit more than $50,000 a year in net profit. You've got traction, you've got consistency, your business is growing. Now is the time to start thinking about an S-corporation. Here is why it matters. As a regular LLC, you are subject to self-employment tax on all of your income, 15.3%. But if you take an S-Corp election, you actually can split your income into 2 parts. Number 1 is your salary, which is taxed as regular income at your normal taxable income bracket. But number 2 is profit distributions. This is a separate part of your pay that is now off to the side right here that is not subject to self-employment tax. Let's say your business earns $100,000. You choose to set a salary, which is reasonable, of $35,000 a year. The $35,000 will get taxed normally as part of your normal tax bracket. But if you pay the remaining $65,000 as distributions, now you don't have to pay that self-employment tax, which can add up to thousands of dollars in savings. In fact, that's about $10,000 in tax savings every year. But to do it legally, there's a few specific steps you must take. Number 1, you must elect an S corporation status by March 15th of the taxable year. Number 2, you need to run payroll through a provider, whether that's QuickBooks, whether it's Gusto, you name it. Number 3, pay yourself a reasonable salary. What's reasonable? Usually it's going to be around 30 to 35% of gross revenue, but make sure you always ask your accountant. And before you ask, yes, you can take distributions throughout the year, and then you can catch up on the payroll as you get near year's end. But working with a payroll provider makes this so much easier so that you don't mess this up. Working with a good payroll provider will make sure there's an auto debit for the taxes that are due. The forms are going to be filed. It will save you the headache and all the expense if you forget. So remember, here's the big picture. Level 1, you're funding the business. Level 2, you're paying yourself based on percentages. And level 3, you're optimizing for taxes and scaling your business. At the end of it all, it comes down to you making sure your business finances are both organized, they are intentional, and you've made sure that you've built all of this to last so that you can scale your business and not only grow your revenues, but put more of that money back into your personal pocket. So don't just pay yourself when you feel like it, because if you don't have a plan for this, you might not ever find yourself making any money in your business. Now, maybe you set up a new LLC for your business, but maybe you structured it as a single member LLC. Did you know there are certain mistakes that if you make with your single member LLC, it can cost you everything? Check out this next video where I walk you through the mistakes to avoid and the steps you must take to protect yourself in setting up a single member LLC. See you over there.